Welcome back to K-Ratio's Week in Preview. I'm Kyle Littner, and I'm here today to provide actionable insight for the future, not recap the past. In this week's episode, the great freight comeback of 2020 keeps on trucking, with LA firmly in the driver's seat. We'll break down what that means for you this week, but first let's take a look at where the freight market currently stands. In what's become a broken record for loyal viewers, the National Outbound Tender Volume Index, in blue, sharply rebounded from the holiday drop-off to historic volume levels only seen during the COVID restock and at the end of June, well beyond anything seen at this time in 2019 or 2018, or ever, really. Obviously, this type of volume at a time when most expected a pullback has resulted in national cancellations popping back up to the peak above 16% seen before the holiday. While it's typical for volume to return before capacity after a long holiday weekend, this type of volume jump is unheard of. And that has caused the national long-haul rate to break above $1.80 to the highest print since July 2018. An incredible feat given the fact that we have an estimated 130,000 more trucks according to FMCSA data. Regardless of one's opinion on the potential duration of this rally, it has been an impressive move higher in rates. As we all know far too well, LA has been the primary driver in this market rally due to a surge of imported goods, much of which went long-haul OTR, further complicating the national supply chain. And while that's going to be the question on everyone's mind moving forward as far as how long this can last, and I'll get to that shortly, I'd like to touch on another major market that we made note of 2 weeks ago. After bottoming out in April after the COVID surge, the lagging Chicago market has finally returned to historical norms for volume levels. Remember, Chicago basically sat this entire freight rally out as all other major markets saw increases in both volumes and rates. You can see this quite well on a 3-month chart depicting the rate per mile of Chicago to Atlanta for the past 2 years. 2020, in blue, bottoms out right when volume for the market cratered and has now exceeded the year-over-year rate at this time, an especially impressive fact given how strong Atlanta is right now. This is a major development because the West Coast has soaked up capacity, much of it at the expense of the Midwest, but now carriers have options in where they want to run high-paying loads. Now this dynamic won't matter much if LA slows down, but that gets us to our next piece of information and something for everyone to take note of. Import shipments at the Port of LA remain very elevated, which will keep things busy in the near term, but it's the longer-term view that we're most interested in. For that, we take a peek at a chart of prices for ocean cargo containers from China to the U.S. West Coast. Apparently shot out of a cannon, current rates for 40-foot containers are twice what they were 2 months ago when this entire LA situation began, and 10% higher than the peak rate seen in late 2018 during the import tariff pull forward. While this is likely a combination of strong U.S. consumer demand and purchasing managers' fear of another trade dispute, if shippers are willing to pay this much to get the freight here, the result domestically will be a second half to 2020 that mirrors what we saw back in 2018. Outbound LA will continue to dominate the national landscape. The only question is if the rest of the country will join in or fade like it did in 2018. What does this mean for freight this week? Well, carriers will be back at full capacity, but they might not be in the right places at the right times, so you can expect high rates on the West Coast and in the Midwest. Brokers, obviously, you'll have tight margins for contract business in those places, but that'll be offset by higher spot market activity and rates for much of the country. Shippers, a note of caution. Yes, higher cancellations and rates again this week, but the real concern is how you're positioned for the remainder of 2020, especially holiday season. Yes, I know it's July, but unless you'd like to get an early start on stuffing brokerage's Christmas stockings, I suggest you look into protective measures right now. To stay up to date with everything freight, follow us on LinkedIn, or for more information on how to protect those portfolios and margins, whether that's from the revenue or expense side, check us out at k-ratio.com. All of you, please stay safe, and thank you again for watching.